Hello everyone and welcome to a new weekly market outlook video. Today we're discussing the price action of this week as always we start with looking at the economic calendar. As we can see, we have no news events on Monday this week for the US dollar and a bank holiday on Tuesday. That for me means that I won't be trading these 2 days, and actually I won't be trading Wednesday as well, as it's the day after bank holiday and I expect the markets to still be a little bit slow, especially with looking at Thursday and Friday, where we have a lot of news events coming up, including the big one, maybe the biggest of all, CPI and PPI, that usually follows the day after CPI. So what I'll be doing for myself, I trade the indices, and I'll be trading Nasdaq and the ES after CPI hits the market on Thursday, because I want to see if the market manipulates. I want to see like where is it going. Uh, is it manipulating one direction and will distribute the other direction, or has the manipulation already happened and is CPI just the expansion to the direction I expect price to go? So that's what I will be looking at Thursday and Friday after 8:30 New York time, when the news events will happen. So yeah, for me it's a slow start of the week. No news on Monday, Tuesday, and Wednesday. Bank holiday on Tuesday, so not touching the markets until CPI. Then let's go on to my favorite part, looking at the charts. As you can see here, after this big SMT we created here with, if I'm not mistaken, the GBP. Let me see here, this is the GBP, yeah, right. We make a lower high over here with on cable, where we make a lower low on DXY. This is inversely correlated pairs, so whenever the DXY makes a lower low, the GBP usually should make a higher high, which it doesn't, as I show you on the chart before. It made a lower high. Actually, we've seen after this big, huge crack happened, we have been reversing, and we just completed this market maker buy model. We took the sell side over here below this low. After that, we've been expanding higher, and we've been respecting every PD, bullish PD array ever since. Fair value gap over here, fair value gap over here. Also this tiny fair value gap over here, traded back into it, traded up higher. Fair value gap over here as well, traded with the bodies, stayed with the bodies inside of it. And even the fair value gap over here, beautiful price action on the DXY, tapped into it, and now we're trading over here, still undecided where we will go next. But unless we're creating some real obvious bearish cracks, I can look bearish for the next trading weeks ahead, but if that doesn't happen, I'll still keep continuing my bias bullish. We still have this huge gap over here, the close of this candle and the open of this candle. There's a huge gap between it, buy side liquidity over here, so I want us to trade higher above here, create some more bodies into this area as well. And yeah, we have a lot of upside liquidity still that could be taken, so curious to see what will happen next. But for now, my bias on the DXY remains bullish. And for all other markets, that would mean that I would be bearish. I've been talking a lot of times about this area over here, the balanced price range on the euro, like because we have here a inverse fair value gap overlapping with a fair value gap. We've traded back into it finally last week, and as you can see on the GBP, we made a lower low over here, while on the euro we made a higher low. I still expect us to trade lower on the euro as well, but it's interesting to see, like, are we gonna create some new bullish cracks or bearish cracks? I will closely be monitoring these markets to see wherever we'll be going next, but gone to my head now, the biggest cracks we have are still bearish, so I will be continuing to look for. I continue to be looking for lower prices next. And the GBP, as you can see here, we made a higher high over here for the euro, a lower high on the GBP. What usually means is that the pair with the lower high is weaker than the pair who creates the higher high, which also means that this pair is more likely to create higher drops. And same for the upside, if you have a bullish crack and a pair creates a higher low on the bottom compared to another pair creating a lower low, you should always long the pair that creates the higher low, because this is the stronger pair and this pair is more likely to expand higher compared to the other one making the lower low, if that makes sense to you. So yeah, we are pretty much in no man's land. Not exactly if we look at the weekly chart for the euro and the GBP. As you can see, over the last few weeks, the price action has been so ugly. So ugly. Like, we've been chopping around, a lot of wicks, not too much bodies. Like, if you look at only the bodies, it's really small bodies all over the place. But if you also take a look at the wicks, like, there's a lot of wicks, which usually is like only mess, because for me, the bodies tell the story of the charts, the wicks are only mess. There's a lot of wicks, so that means there's a lot of mess. Also, one PD array or one cracking correlation I want to point out over here is on the weekly chart. You see that this candle over here for the euro closed bullish. It's a green one. While for the GBP here on the right side, that same exact candle closed bearish, purple. This is also cracking correlation that I will also show you in another market in a few minutes, that I use for my own analysis to confirm my bias. Like, whenever I see this huge crack over here happen, and in combination with this crack in closure color of the candle, like whether it's bullish or bearish, this is for me a huge sign that a reversal is likely to happen. Because whenever there's cracks in correlation between correlated markets, this means that the market wants to turn. So let's move on right away to gold and silver. If you can see, the weekly chart is already opened. You see over here that this candle on the weekly chart closed bullish, a green one, on silver, while on gold it's definitely bearish. And after this happened, this PSP, precision swing point, is what this kind of candle is called. You've seen that we've been expanded higher again, and in combination with two SMTs, one on the lower time frame over here, one on the more higher time frame over here, where silver trades back into this fair value gap on the 22nd of September, where gold obviously doesn't, makes the higher high over here, higher low. The combination of these three cracks actually tell me that I expect price to trade higher from here again, and I want and actually what I can say now is that I expect price to create new all-time highs from where we are now. So that's it for gold. Last but not least is always crypto, because crypto has taken a massive dump over the last few weeks. As you can see here, we created the higher high over here on Bitcoin, lower high on Ethereum. Then on the lower time frame over here, we also had a higher high on Ethereum, where on the same pair of candles we created a lower high on Bitcoin. We've been expanding lower after that on both markets, which for me means like no SMT over here between the lows. That's another confirmation for me that these cracks are valid, that we will trade lower. Traded back into this inverse fair value gap over here, tapped that, been traded lower ever since, and now I expect us actually to trade even more to the downside, because here now we created equal lows on Bitcoin as well, a lot of liquidity below here. On Ethereum, the same story, like we have a crack over here between these lows, but for me this is not enough unless confirmed otherwise on the lower time frame that we would trade higher now. We just traded into this bearish fair value gap, and gun to my head now, I expect us to trade even lower on crypto. So let's see what will happen there. I hope you like this video. Please like and subscribe, and I hope to see you in the next one. Take care.